Hello, folks. Good evening. This is Srini from Techie Investor. I hope you all had a fabulous day today. Definitely, the market was mind-blowing. It was just rising up and up, especially with the Qs and the semis going and forming, definitely forming a day high. I'm not saying all-time high, but just a day high, especially led by NVIDIA before the Jensen speech today, and all the stocks went up. But today I am here to just discuss with you about a very important topic which many of my subscribers have been asking. It's called gap trading strategy. In particular, I want to cover 4 things about it. What is a gap? So how do you identify a gap in the chart? The third is how do you position? How do you position when the stock is gapped up or gapped down? And then how do you exit out of this position, according to your systems, right? So those are the 4 things that I wanted to cover. Take Oracle as an example because it was a recent earnings and they really gapped up. And also after that, we'll take DLTR or DG for the gap downside. They also gapped down because of a bad earnings. So we'll take these 2 examples and see how we could position accordingly. Okay. So let's start and looking at the charts. So here we are looking at the Oracle chart, and Oracle chart, as you see that on the day of the earnings, they gave a very good earnings. As you can see, they gave a their earnings per share of 16.8% versus Q1 to 2024. That's their revenue, and their EPS price was around 5.3%. And also they announced big time partnerships with all the cloud providers, AWS, then Microsoft and Google. And of course, as we all know, that Oracle database is definitely one of the leading database providers, right? And also, there's a rumor, I don't know to what extent it is true, that the Oracle has acquired the maximum number of GPUs from NVIDIA. So they are looking to position themselves as the AI leaders. Okay, so that's what it looks like. So with all these things, definitely the stock gapped up. So one thing we have to notice that for the earnings, when we cannot here, it didn't close above the EMA 821, and that didn't give us a chance to enter this position before the earnings. Sometimes this happens, but this was again bullish on the weekly. But I would not take that chance. So I was waiting for the earnings to come over. Once the earnings came, it's closed over this line. This was the trend line that I had drawn between the previous swing high, right? If you see here, the swing high the line was drawn from here to here and it broke through this. Once it broke through this, it's a very good opportunity to trade this stock because it was in a good momentum trade, right? Because they gave a very good earnings and then this went up. So once it started up, then what happened? Then it went up to 1.375% retracement, and then it went up to $160, and then it's now retracing back. Today there was an inside candle. Now what's going to happen next is it's going to come back to the mean. What do I mean by mean? I mean, whenever a stock gaps up, there's a huge gap here. What I mean for this, what we have to understand is, what is a gap? A gap is nothing but when the stock current close price is like and the previous close, if there is a gap between that, we call it a gap. So, and most of the time, there will be always a gap fill. That means the stock will tend to come back to fill this gap. So where could it fill this gap? The gap is like around 139.91, and then it moved up here. So it could come all the way to here, around 143.80 or something like that. But will it happen immediately? Nobody can say that because we don't know. It depends upon the momentum of the stock and those kind of things. But surely sometime this gap can be filled up. However, what is the next step? So once it gets here, so we played this stock to get to here to the $160, and that was a good profit. It was like around from here 153 to 160. That was a $7 profit, folks, because it was a momentum because of the earnings, and it broke through the trend line, which is a normal as per your system, and this was a trade. Now, what could happen next? The next is after this, it could come back to the EMA 821 cloud. Why? This is called as a mean convergence. That means there is a divergence now. It is like way away from the EMA 821. And you don't want to be in this position for a long period of time, because sooner or later it will get attracted to the EMA 821 cloud. And it's always good to play closer to the EMA 821 cloud for the better risk reward ratio. So that is what is going to happen. So what I'm expecting right now is it might break through this line, or it could break through this. It may not even break through this line. I'm not sure. It could even go down to 162.93 once it reaches the target, because it went to 50%. And then it could go here to 162.93. And then once it retraces, it could come back up to this EMA 821. So this could happen, but could you make a trade out of it? I don't know at this point of time, because we are not sure at this point of time how the entire market is. Like, how is the QQs and how are the SPY going to is going to be at that point of time? Is the stock going to go down with the market or up with the market? But it is always good to play closer to the EMA 821 cloud. And that way we can make sure that our risk is not much, but our reward could be good. Okay. So that's one thing about Oracle. The next one which I wanted to talk about is DG, or we can take DLTR, which is both of them had a very bad earnings. If you see here, this is a three-wave correction, folks. Classic three-wave correction. If you see this, it came here, but here it gave us an indication that it is going to go down for the earnings, because you see here before the earnings, it just came, I don't know why there are a couple of gaps, but definitely it gave an indication that it wants to go down from this here, right? So definitely it went up here, went down here, and then it went down further here, right? So if I was playing this gap, right? If I was playing this gap, for example, I came here, but still this seems to be very downtrend for me. So I would still continue to, I played a puts here. I would play puts here because I know that this is still in a very downtrend. It's below my Ichimoku cloud, below my EMA 821 cloud, and it still took it down. Now, will this gap be covered? Absolutely, it will be covered. But now, since it has formed a low and it's forming a base, we are seeing higher highs. Did we see? Actually, yes, we saw a higher high here. That is the first signal that it wants to go up. So that's what, and we are seeing higher lows. So this is what we want to see before we enter a long position trade. So that is what we are looking for, folks. So this one, it fell for around 39 candles or something like that. So we might take some time to get there, but where is the target? The first target could be here around 85.66 for the DLTR. So that is where it wants to go. So let's see how fast it can go there, or this kind of a thing, right? So definitely there are some lines drawn here, those kind of things. So the bottom line in this video, what I wanted to cover is, whenever there is a gap up or a gap down, there can be two signs. One is it could continue in the direction it is going, or it could decelerate, or it could reverse back. But how do we know which direction it is going? You cannot purely do it based on the gap ups or gap downs, but you can do it based on other lines on the chart, such as your trend lines, your EMA 821s, your Ichimoku clouds, whatever system you are using. That should be used to indicate, to place a trade where it wants to go. Definitely with the gap ups and gap down, there is plenty of momentum. And if you trade in the right direction, there's plenty of money to be made. That's what I wanted to share with you in this video, folks. Hope this information is valuable to you, and I will catch you in the next one.